Matt Faircloth, thank you very much for joining me here on the show today.
It is an honor to be here. Thank you so much for having me.
Where are you calling us from?
I'm here in Trenton, New Jersey. Lovely Trenton, and my office is over on Broad Street in downtown Trenton. We have about a 10,000 square foot office building that we own, and I have one small office in my office building, and we've got all kinds of different companies that all rent spaces from us here.
Oh, awesome. So how is real estate doing up there?
It's good. I mean, it's a good D and C level market. We don't do much D level investing, but we tend to play in the C neighborhoods, and there's some B level neighborhoods here too. And I mean, just investing, it's primarily almost all a rental community. So it's not, Trenton itself is not a good place for flips yet, although I think that may change in the next 5 years or so. It's a good rental neighborhood. It's a good, they're good, solid tenants that'll rent your places, and the prices are very, very are favorable. So I think it's a good place to landlord, and the regulations aren't too crazy. I mean, it's typical Northeast regulations of landlording and stuff. So there's registration and inspections you have to do and everything like that, but it's not too awful as compared to other places that I've heard of. So
Got it. So is that where you're only investing in, or
no.
there's other states?
No. We're in other places too.
Okay.
I can't live and die by one area.
Right.
So we're in Pennsylvania. We were in Philly. I sold my building there about 6 months ago. We have a lot of flips going on in Philly. But we're also in central Pennsylvania. I have an apartment complex in central PA out in Lancaster County. And we're also in North Carolina. We have a complex in Fayetteville, North Carolina, and we're actively seeking more assets down there.
Got it. So yeah, let's jump into your background and tell us how you got started in real estate in the first place.
Sure. Okay. Graduated college I'll date myself, and I graduated college in 1998, 20 years ago. I got a job working for a company called Ingersoll Rand. They're a equipment manufacturer. And I got a job selling their industrial machinery all across North Carolina, where I lived back then. And then I moved to Philly and was a salesman, and I did very well and sold their industrial stuff and got to go into all kinds of different factories. Went to just sell these machines. They're just high priced machines that I got paid commission on and stuff like that. It was a good job. And I got to kind of work my own hours and, work from home and everything like that. So there was a lot of freedom. There's a lot of freedom associated with it. But I wanted more and wasn't sure what more looked like. I started dating a lovely young lady that became my wife later, named Liz. And Liz got me to read Rich Dad Poor Dad. And I realized in reading that it really opened up my eyes towards the possibility of living a bigger life and owning my time and being a larger contributor to society, and using a lot of my different skills and a lot of my different things I'd learned over life towards owning a business. And so soon after reading that book, and then playing the board game and reading a lot of his other books and stuff like that, I just drank a lot of the Robert Kiyosaki Kool-Aid back then, and got heavy into that. And then Liz and I got married in 2000. I'm skipping part. I was like, you know what? I'm gonna buy a property. And I had sold right before Liz and I met. I had a big sale at a Minute Maid orange juice. Everybody knows Minute Maid. So I sold a huge amount of equipment to Minute Maid orange juice. Put me on the top four. And I was the number 4 salesman in the whole country that year, out of hundreds and hundreds of salesmen. But I didn't know what to do with this enormous commission check that I got, which was back then was enormous to me. So I just you know what, I got to do something with this. I put it in a savings account. Wasn't sure what to do. And then I met Liz, started talking about real estate and this and that. So I was like, you know what, I'm going to buy a house. And it just so happened the place I was living, the landlord wanted to sell the house that we were in. So we tried to buy that, couldn't get the house that we were in. So I went out and found another house, bought a 3-bedroom, 2-bath, and had 2 buddies that were living me in the place we were renting. Those 2 buddies moved with me to the place that I bought. And I bought it for $150K, laid like $4,500 down on a 3% FHA loan. My mortgage payment was $960 a month, including the taxes and insurance and everything, right? And those two buddies each paid me $500 a month. And so
Oh, wow.
I was 26 years old, making $60 a month and living in the house for free, right?
Dude, that's awesome. So
It's sick.
that's kind of what we call house hacking, right?
It's exactly what we call a house hack. I didn't
Yeah.
know that's what it was called. I think that's an invented term, but that's what's, you know, I think it's a great term, and that's exactly what I was doing. And at that time, at 26 years old, I had an enormous amount of credit card debt and an enormous amount of student loans, but I still had a salary working for Ingersoll Rand. So in 2 years, I paid off all my student loans and paid off all my credit cards.
That
So
is the power of
uh,
real estate. That's how you use real estate right there, right?
yeah, it's great. My credit score went up like 150 points. You know, I eked into buying the house that I was in, but was able to really get my personal credit in better situation. So that I was sold. Like, this is amazing. This is the best thing I've ever done. So my, you know, girlfriend, now wife, and I got together. I was like, you know, we need to do more of this. So we went out and bought a duplex in the city of Philadelphia, bought a two family, and renovated it, you know, got tenants in there, immediately had an eviction. Like a week after closing, we had to file eviction on one of the tenants. So just cut our teeth quick in real estate. You know, I mean, just the tenant was cursing me out and everything like that. I mean, you know, it was, I quickly got broken in as a landlord when we got into the business. So
That's kind of when you realize, like, oh man, I'm not so sure if I want to do this after all.
it was weird. It was interesting. The first couple of years were interesting as landlords, to say the least. You know, I never really. I've had a few moments of like, geez, why did I get into? You know, like you have these low moments in life. I think of just like, why did I ever do this? But for the most part, I don't really question why I got into real estate. I really love it. And I love owning my business. I love owning my time. I love a lot of the things that real estate does for me. And that it just, there's moments where I'm just like, geez, this sure is hard. You know,
Yeah,
like the
yeah,
conversation I had before you and I started airing, where I've got a flooded basement at one of my four families right now. But just, you know, it's a typical business day. We figure it out, you know?
yeah. And it's kind of like we were saying, to get into the long term, right? It's not something quick where you're gonna sit down on the beach and relax after, you know, a couple of years. It's gonna take some commitment, and if you're willing to do that, then there's a lot of good rewards on the back end. So you have these
Sure.
first couple of properties. So tell us the progression after that. What happened after that?
Okay, so then Liz and I got married in this 2005. We got married, and we, because of the job that she had, we had to move to New Jersey. So we left Pennsylvania, where I lived, in a little town called Conshohocken, and the only way you would know how to spell that is if you lived there. Like that's yeah.
Yeah.
It's like it's an Indian name that means hard, you know, name that's hard to spell, I think. But we moved from there. I moved from there to Jersey to move in with her to a place just south of Princeton called Bordentown. We still live there,
Okay.
and I subscribe to that Acres of Diamonds philosophy. There's a you know book and a you know a talk called Acres of Diamonds. And it's about just there's wealth in your own backyard. And so we started looking around our local area for places to invest. And I'm realizing very quickly that Philadelphia was 45 minutes one way. And for just getting started, that was a long way to commute. Um, Simultaneously, Liz and I were also talking about like, we need to be doing this, you know, full time. We need to just kind of like grab our cojones and invest full time. And Liz actually had a good job too. We both had good jobs, you know, both well-paying, you know, high-paid employees.
Right.
But we figured out that I was probably less passionate about what I did than she was, and she also had a master's degree and more student loans to pay off and everything like that. So we decided that it would be better if I quit my job that I was just kind of done with, and she kept her job, and we just lived below our means. And I'd invested full time. And so in 2000, end of 2005, early '06, that's what we did. So she kept doing what we did, and she became the breadwinner of our family, of the two of us. And we bought a house below our means, figured out how to live below our means on our income. And I think that's one of the biggest, if I could give like a little key tip to your listeners, is you have to live below your means. If you want to be successful in this business, you've got to make some sacrifices in the beginning, but also just, I don't call living below your means a sacrifice. That's just financial responsibility, that if you can afford the 4,000 square foot house that costs 450 grand, that doesn't mean you should buy that just because you can
Exactly.
afford it. Right. You don't
Exactly.
need that. I mean, you've got to be fiscally responsible and live way below your means. And because sometimes this business doesn't pay out on the 1st and the 15th like a job does.
Yeah.
This business sometimes requires you to hold your breath for a little bit to get paid. So if you don't need every drop of your paycheck to pay your bills, it's helpful to have some money squirreled away. And another bad news about this business is it takes money sometimes in this business. You need money. And so if you don't have any money at all, then it's very helpful to live below your means. So
What do you think is a reason for that? That a lot of people don't do that though. Is it a mindset kind of thing, or is it because they're not financially literate? What would you say on that?
Yes. I think it's mindset. I think it's financial literacy mostly. I think that one of the biggest things you got to do if you're first getting started is learn how to read a profit and loss statement and balance sheet and learn how to create one for yourself personally. So
And know about your net worth, right? Your net worth statement.
yeah, know
Because
your net worth. Know what you're worth.
yeah, you're right. And I think most people, these days, they'll look at their credit. They rate themselves as their credit score, and it shouldn't be like that. It should be on your net worth.
Net worth's important, but net worth doesn't put money in your pocket. What puts money in your pocket is cash flow. And so,
Exactly. Yeah.
yeah, so it's good to know net worth. It's good to know for your bankability. It's good to know for, I mean, just as like a success measure of net worth and everything like that. Oh, hey, I'm worth X amount of dollars. Good to know. And some people might find if they calculate their net worth, that depressingly, they might be in the negative. And that's, if you like total up all your assets and all your liabilities, that you might actually not, you might be worth a negative number, because you owe so much in debt. And so part of knowing your net worth and knowing your personal balance sheet will enable you to clean up your finances and say, like, okay, let me get some of this debt paid off. Let me increase my income, increase my assets, find ways to decrease my debt, and too many people don't focus on, to your question about mindset and financial responsibility, people don't focus enough on just eliminating or reducing liabilities and saying, like, let me just pay these credit cards off. Let me just, do I need a car with a $650 monthly payment? Maybe not, maybe right now, no, maybe eventually I do when I've got assets that can pay that monthly payment. But finding a way to strategically reduce your monthly expense line and also what your just liabilities are a good way to get yourself started, because as you build a business, your financial statement, your balance sheet is going to become more and more complicated. And when you go for loans, banks are going to want to see that. So you might as well get really good at creating that for yourself now before you own property, before you've done a deal, is to get really, really good at knowing your current financial situation. I comment before about cash flow is what, it's money coming in your pocket every
That's what
month.
keeps you going.
Yeah. I mean,
Yeah.
it's hard to maintain without cash flow. So
Okay.
you need that too.
Yeah. And so you have done a residential. You talked about you had a multifamily property out in Philadelphia. Is that correct?
We had a 2-family in Philly. We kept the single family home that I moved out of. We kept both of those assets and moved to New Jersey and started investing full time. Like I said, Acres of Diamonds, started investing, locally where we were in New Jersey. That's how we found Trenton, started investing in Trenton. And just started growing locally in our own backyard.
Right. What's the biggest project that you've done to date?
Oh, we bought 198 units in North Carolina recently. That's our biggest by far. Was doing that purchase is 198 doors.
Nice. So let's talk about that a little bit. How were you able to find that property, and how were you able to get it funded and things like that?
I should say that there's a lot of steps in between now, and we don't have to talk about them, but there's a lot of steps in between now, where I'm at now and where I just talked about I was. And so I don't want your listeners to say, oh, that's awesome, I'm going to go buy a duplex like Matt did. And before that, I'm going to buy a single family home and live in it, then a duplex. And then I'm going to go and buy a 198 unit apartment building.
It doesn't happen like that.
Right. A recommendation I give people is try and double your portfolio every deal that you do, for the first, year or two. So you can just grow up to 198. You can do a 198 unit deal, but I don't subscribe to the run to the back of the room gurus and the people that are selling packages to teach you how to buy apartment buildings, or the people that have something to sell. I don't have anything to sell. And so I'm just telling you straight, if you're just getting started, you're not ready to buy a big multifamily like that. You have a high likely chance of screwing the whole thing up and falling on your face. And I'm saying that with love. I'm saying that from a perspective of that you should grow your way up through smaller real estate deals and into bigger ones. The folks that do have something to sell will tell you something different, and they'll tell you that you should go out and buy a 198 unit apartment building, first deal. And for the low price of $5,000, buy my package and I'll teach you how to do it, so just,
Yeah.
right. So I don't have that, and I'll just tell you straight up. It took a while to get there. So talking about that deal it's a big value add deal, meaning we were gut renovating all the apartments. The building was way underperforming. It's a ugly duckling. It's what you want, even on a small scale. It is, you want to buy a property, you can add value that you can, through renovations, through remanaging, through redirecting, you can take something that could easily have a big bump in value to it. That if you put in X in investment, the property will be worth a multiple of X. And that's real estate, man. That's creating value. It's what you're doing. I'm going to put in $100,000 in renovations, and the property will be worth $300,000 because of the renovations I did. That's a fix and flip. That's a fix and flip. That's a renovated apartment building. That's whatever it is. And just creating value. And I think that's what real estate, that if you're a good real estate investor, that's what you're doing. You're just finding something you can create big value to, and then implementing that plan to create value, and then reaping that value through rents or through a sale or through refinancing it or whatever it is.
Got it. That makes sense. So how were you able to source this multifamily property, and what was your vacancy? I mean, what was your occupancy like?
There's nothing. It was in bad shape. When we found it, it was like 85% occupied. When we closed, it was 78, and now we've owned it for about 3 months. It's down to like in the 60% occupied.
And that's because of the reposition process, right?
Yes. But we underwrote it that way. We underwrote it thinking that this is going to be a bad situation, and a lot of the bad actors on site. We had multiple drug dealers living on site. We had just a lot of folks that were used to living in a complex with poor management and with they're just people that are used to living in a badly run complex, kind of the folks you would expect to be living in a complex like that. So we ended up coming in and changing up new management, and getting the local police to come out there and start to patrol the site, because the prior manager told the police, "You're not welcome on site. We don't need you here." Yeah.
That's a recipe for disaster.
We will handle the site ourselves. We don't need any police presence. So we immediately were like, we want to work with the local municipality. So the police patrolled the site a bunch of times, and they've, made some arrests and got some of the bad actors out of there. And I think that in any circumstance, I bought several multis, and in almost every circumstance has been maybe 10% of the population are bad actors that are taking advantage of the prior management, that are folks that are, and this isn't the first time I've bought property. I've been doing this for 13 years now. I've bought plenty of properties that have had drug dealers in them. And, I've had to deal with that. I've had to deal with, people that are used to not paying their rent for months at a time. I've dealt with people that have tons of unregistered people living there, not unregistered federally, not like, undocumented workers. I'm talking about like, the mother or the mother and father that have like also their cousin and their uncle, and like 8 people living in a 2-bedroom or something like that. And just we've had to shake a lot of that up. So I'm used to that. So we're right now, we're about at rock bottom, and we're about to build it back up. So we're renovating all the apartments, getting rents up to market, because the rents weren't at market. Just to give you an example, the rents were at like $550 a month, and the market is $675.
Yeah, so it has a lot of room for improvement. Yeah,
it does. And some people listen, it's like, oh, it's only $125.
That's a huge number on multifamily property.
Well, $125 a month times 198 doors times 12 months is a ton of money.
Divided by the cap rate.
Yeah, right. That's the game. That's it. You just said it.
There's huge opportunity, but like Matt was saying, I mean, if it's your first property, then that's not recommended at all to try to get try to take down a 198 unit. But yeah, after you've done it for so many years, like he has, then yeah, it's a good progression to get into.
we live in a right now mentality. We live in a world of microwave ovens and Netflix. So you want it, whatever it is you want it immediately, and that. So, and I find myself wanting things right now too, because I'm in the same world you guys are in. So it's like, but I find that with planning and patience and that you actually don't have to wait too long. And that. So, and I have a 4-year-old, so I can't get him to wait for anything. And so I find myself in the same boat as well, that like tomorrow seems like a million years away. But if you tell yourself like, yeah, I want to buy a 198 unit and I want to do it in 2 years, 3 years, it is possible. It can be done. It just with a little bit of patience and a little bit of strategic planning and growth and alliances and,
education.
building a team and education, it can easily be done.
Okay. So back to this property, how much are you putting per unit and what is your overall plan, for exit?
In Reno?
Yeah.
Okay. Well, we bought it for $33,000 a door. We are paying $8,800 a door in Reno. So that'll take us up to $42,000 a door, all in invested. And cash flow takes care of carrying costs, and there is enough cash flow to maintain the property. The market is around $60,000 a door. So once we finish, and there's stuff selling for more than that down there. Once we finish that reno, we plan on refinancing and returning a chunk of investors' capital. Once all that's done, probably in year 2.
Is that your focus now more, is acquiring these multifamily properties?
Here's where I'm at. I do a lot of work with investors. Like I do, like most of my work is, I've got a few outlets, and passive investors approach us and say, I want to invest in real estate, but I don't have the time. Okay, let me help you. So one of those places that I work with those investors is placing them in mid-sized multi through a syndication with us, like an SEC, like an SEC level syndication. Okay.
Right.
That's one thing. The next thing I do is I do fix and flips through private loans, fix and flips and BRRRR stuff through private loans. BRRRR is the buy, renovate, rent out, refinance, repeat method, right? So I do that by working with private lenders. And then the third thing we do is we offer turnkeys. Not too many, but we may be scaling that part of the business up because there's a lot of folks that want to have a little more control than a syndication. So we sell turnkeys sold at market rate prices. So those are our 3 focuses. I've got people on my team that kind of help me run those 3 divisions. I do most of my work with inbound investors that want to come in, and I talk to them about, hey, this is how we do what we do. And that, so that I think that there's a big market for, just not everybody has to be a direct operator in real estate like you and I are, right? There are people that want to invest passively in this business, and there's a need for providing those passive investments to people, and for us offering folks an alternative to Wall Street, because there's people out there. A lot of my investors that invest with me love what they do. They love their job. They want to keep doing their job, or I got people that are radiologists and doctors and everything like that invest with me, and they can't afford to leave their job because of the amount of training they went through and the amount of school they went through for that job, and they get paid very well for doing what they do, but they want to diversify their wealth and they want to invest in other things like real estate. So what I do is I offer that to people, just alternative ways for people to build their wealth outside of Wall Street.
Got it. No, that makes a lot of sense, because not everybody that gets into real estate, wants to be an operator. Not everybody wants to be a syndicator. People want to diversify. You're going through all that training, going through all that school, and if you're a high income earner, why would you want to do that? Anyways, why would you?
I got one guy. I mean, he didn't get a PhD, but he's a college professor, and he loves what he teaches. He loves his job. He loves what he does. He really does. But he also has read enough books to get that he can't live and die by the Dow Jones Industrial Average. That right now it's up. That's great. But what's it going to do tomorrow? Who knows? I mean, I can tell you that if my tenants don't pay rent tomorrow, I have recourse. And if that passive investor invests in a loan with me, and we're not able to pay the loan, or the property doesn't do what it's supposed to do, they have recourse. And on a syndication deal, a big deal or whatever, there's recourse there too for tenants not paying their rent, or, and everything like that. Whereas if the Dow Jones Industrial Average, just crashes tomorrow, there's really no recourse. You can't go to Bill Gates and say, hey man, I invested in Microsoft and you're not able to pay my dividend this month. There's very little.
It doesn't work like that.
What?
It doesn't work like that.
No. No, it would not, but at the end of the day, I think that real estate gives more recourse to investors than other asset investment classes do.
I agree with you 100%. And I hope you guys also understand that. And so let's talk about your worst deal ever. Tell us,
Oh,
what is your worst deal ever
take your
and what
pick.
did you learn on that?
I said, take your pick, man. Um, yeah, jeez, I got so many. I've been around for a while, and if you guys watching video, because I got all this gray hair going on now, which I'm,
That's funny.
yeah,
Oh
yeah.
man.
So let's see. I did a fix and flip. We got our teeth kicked on. I tell that story a lot. Um, I would say probably bad partnerships have been like a bad deal that we've done. I wrote a book for BiggerPockets recently. We talked about a lot of bad deals that we did in there and what I learned from them, and also great deals that we did. We made a ton of money, and what we learned from them too.
What was the
Uh,
name of the book?
it's called Raising Private Capital. It's how to build your real estate empire with other people's money. And it's a very necessary story that needs to get told. It's what I just talked about. It's about how active investors like you and I can work with passive investors immediately around them to build strategic alliances to help your passive investors build their wealth and build their retirement, and increase their personal cash flow while you go out and build your real estate business. So it's a in-depth how to, starting from never built a private money deal before ever, to folks that are like you and I that have done big deals, to like SEC conversations and how to build joint ventures and stuff like that. So it's the full spectrum on how to do how to structure private money deals. Everything from what documents to use, and everything's in there.
Oh, it sounds like a great book. It sounds like a great book to educate yourself and to learn a lot of the nuts and bolts of that part.
Yeah,
When
and
is it
I
coming
talk about
out?
a lot of bad deals that I've done in there too. And so I probably just
That's
say just
part
go
of
ahead
it,
and read the
right?
book. It'll
Yeah,
be out in mhm.
yeah. No, I was saying that's part of learning, right? Is you got to talk about the bad parts as well.
That's
And
where you learn more. There's more lessons in failure than there are in success, believe it or not.
yeah,
I,
and
yeah.
when is the book coming out?
I believe it comes out in July. It's through BiggerPockets, and so they'll probably start doing pre-release and pre-marketing on it and everything like that. But I just put my heart and soul into it, so and I'm very proud of it, and I'm very excited about it. But I think late June, early July, it'll be coming out. So watch for that rolling out through BiggerPockets.
Yeah, guys, and I will definitely put that in the show notes like that. You guys can check it out as well whenever it's ready to come out. So
It's
definitely a
called
good book to
Raising Private Capital.
Raising Private Capital. Awesome.
Yeah.
Matt, what is one thing you wish you knew when you first got started?
One thing I wish I knew when I first got started. I wish I knew how important it was to just kind of like plan your work and work your plan, and just stay focused on goals, and how tempting it is to get pulled off of those goals through shiny nickels and stuff like that, because this is a very exciting business, but there's so many different ways you can make money in this business. Um, and when I first got started, it took me a while to go in to really focus on what I wanted, and it took me a couple of years to really get there. And I think I would have grown a lot faster had I just sat down and said, "Okay, I'm going to buy this many units. I'm going to do it with these kind of deals. I'm going to structure it this way." Maybe not knowing exactly how it's going to happen, but just putting the specific goals there, and then focusing each day just on those goals, and having the courage to turn down things that might sound interesting that are not in line with my goals.
Yeah,
Because I didn't do that. I chased things that weren't aligned with my goals, and I would have gotten a lot further had I had the courage to turn those down.
yeah, and I agree with you 100%. It's so difficult, especially when you're first starting out. It's so difficult to stay focused on one specific area, right? You hear all these seminars, and you want to try that, and then you want to try this one, and then the next weekend there's another one, and you want to go try that
And
now.
it's all exciting. And in all the business is exciting. There's money you can make on everything. But when I first got started, I was looking at a land deal on Monday, and I was looking at a strip center on Tuesday, and I was looking at then I was trying to short sale on Wednesday, and it was all exciting, and it was all would have made me a bunch of money. But without a good set of goals that I was willing to stick to, I was like an unanchored ship, and just whatever I bumped into was what I was doing for the day.
Yeah, quit chasing rabbits is what it
Yep.
comes down to.
Yep.
What is one key tip or advice you would give to others who are looking to get started or take their business to the next level?
Hmm. Okay. Aside from the setting goals thing, I would say we've covered about like I'm just reiterating what you and I have already talked about, and I'll give another one on top of this. But being really in touch with your personal and your business finances on a regular basis, so that you can be able to regurgitate them. And if you're already in business, then you should be able to just spit out your personal financial statement when a bank asks for it. Don't have to sit down. Oh, I got to make my PFS now. No, you should have it ready, and you can give it to them in your format that you can just hand it over to banks as soon as they ask for it. So I think having your financial house in order. Other bits of advice that I think are keys to success is not giving up, because this business can bite back pretty hard sometimes, because there's a lot of money involved, and there are setbacks that happen regularly. And so I think that by not getting frustrated by those setbacks or taking them personally, and just realizing that this too will pass, yeah, and getting through setbacks, I think is one of the biggest keys to success. And because I've been around long enough I've been through the downturn in 2008, and I've been through plenty of setbacks between now and then, and now when I got started. And I found that one of just the keys to success is just by putting one foot in the other and keeping moving.
Great answers. I love that. And so I'm not going to ask you about a book, but I guess we could talk about it.
I can recommend other books, and aside from my book, Raising Private Capital, that folks can check out soon. I'm reading right now. This is kind of like what I'm reading right now. This is fresh in my mind. I've read a ton of great books that I could recommend, but right now what's really hitting me is a book called Lifeonaire. As in like millionaire, but Lifeonaire. So not looking for millions, looking for life. Brandon Turner from BiggerPockets recommended it, and I picked it up, and it's been great so far. And it's really about like just living for what the one limited resource is time, and realizing that controlling time is really what we want. When you question like, I want to be a millionaire. Why? So I can live the life I want. Why? So I can really have control of my time. Okay, got it. That's why you want to be a millionaire, is so you can do whatever you want. You can travel, you can, enjoy your life. But really, enjoying life is about controlling time. It's not about money, and everything. And I think people realize that if they can let go of the dollar figures that they need to get where they want to in life, if they can let go of that, they can realize that personal freedom is actually a lot closer than they think it is, if they're willing to make decisions based on time. So, anyway, so the book's called Lifeonaire.
Great. Yeah, I'm gonna have to check that book out as well, because I've actually heard of that book, but I have not got around to actually buying it.
It's good on audio. It's one of those books that's a storybook. So meaning like they take like like fictional characters and weave the story into the lives of these fictional characters and tell a story, and all that. So it's actually good on audio. I'm not reading it. I'm listening to it on Audible.
Okay.
And it's well read and all that. So
definitely got to check it out. Okay, guys, Lifeonaire. Where are you looking to take your business here in the next 10 years?
Next 10 years, man. I mean, it's funny because we're considering some transitions in our business and things that we want to do. We, as in my wife and I, a lot of those have to do with just continuing to step into more and more ownership of our time, while we also find a way to serve more people. And so we want to find a way to serve more people that want to learn how to do what we do. This is why I wrote the book. But also how to invest passively, and people that are just sick and tired of like, just fretting where their life savings is going to go if the stock market decides it's going to take a hiccup. And people that have more control than you and I do, or decide they're going to push a little button and make the stock market dip, or decide that the price of oil is too high, or decide for one reason or another that the stock market value should change, which changes people's retirement accounts and all that. So I think that I'd like to find ways to serve more of those people. More strategic alliances too, like more trying to find ways to duplicate myself and create more people like me that are out in the field, finding deals, finding opportunities, finding things to invest in. So, and me continuing to pump capital, into things that make sense.
Yeah. And I guess you kind of touched on my next question, which is at the end of your life, how do you want to be remembered?
As a loving father, a loving husband, more like importantly of all of that, but as somebody who made a difference in people's lives. I mean, I did this men's weekend a while ago, and they talked about purpose. and what our purpose is in life. It just, like, what is your purpose? Well, geez, it's tough to figure that out. And so instead of like sitting down and writing these like lofty purpose statements and stuff like that, I feel like a lot of times your purpose is larger than words. But what came up for me in general is to challenge myself and to inspire others to do the same, to just like grow my personal boundaries. That's what it was, to like expand my boundaries of what's possible for me. So that means like a couple of years ago, I did a triathlon. When I registered for the triathlon, I didn't know how to swim. Right.
So,
So
so that's when you actually dedicated yourself to actually learn how to swim,
you
right?
better believe I better learn. I
Yeah.
got to learn now. I'm motivating Matt Faircloth requires lighting a fire under myself. And so I know me, and I know that I'm not going to just go and start swimming. I better create some sense of urgency. And so I registered for triathlon. Oh, geez, I better learn. So I learned how to swim really well. I'm actually a pretty good swimmer now. And so, right, because I've done 2 triathlons. I did another one. It's crazy.
Wow.
So, yeah. So anyway, it's things like that I do to myself to expand my personal boundaries, and I try to inspire others to do the same thing. That by
That
like, hey man, you can do that too. You can do a triathlon. You can buy an apartment building. You can, quit your job and do what you love and all that kind of stuff. And so it's about like just helping people expand their boundaries. I want to be remembered as someone who inspired people to live bigger. You know.
perfect, great answer. I love that. So man, where can Commit to Wealth Nation go to find out more about you and your company?
DeRosaGroup.com is a great place to start. My company's the DeRosa Group. That's DEROSA, DeRosa Group. They can contact us there. They can also look us up on YouTube. As I think we have a very vibrant YouTube page. So just look up DeRosa Group on YouTube. And again, DEROSA Group. And they can check us out. We do videos every couple days, and a few other people are posting on my channel too. Just real estate education. I mean, you don't have to watch a commercial when you watch my videos. It's just just stuff that's out there teaching people how to do what we do. And so we just want to make a difference and inspire people and give people the resources that they can go forth and run a real estate business and not make the mistakes that we did, and learn a bit from what we're going through, from how we're doing it.
Okay. So you said your website, your channel, and BiggerPockets, right? That'll be another way
My
to.
wife would shoot me if I didn't mention that she also has a podcast for women only, called the Real Estate Invest Her Show. And it's for women real estate investors, and something like 15% of the real estate investor population are women. And so I've seen the struggles that women have to go through as real estate investors, not just watching my own wife go through it, but also other women friends that I have that invest. This business is male friendly as construction is, which is a necessary evil of real estate. We have a friend that invests in real estate full time, and so contractors will say awful things to her, like, hey, here's the bid. Why don't you review it with your husband and let me know when you decide what you want to do, or say things like, shouldn't your husband be here for this? Kind of stuff like that, like just
Yeah.
expecting that you're a woman and you shouldn't be making these decisions and stuff like that. So, so Liz, my wife, is a voice for women, and there's becoming more and more of them in the real estate business. So it's called the Real Estate Invest Her Show.
Yes, guys, and I have personally listened to a couple of those episodes, and I really enjoy it, and it's good for guys as well. So don't think it's just for women. It's a
I
very
listen to it
useful
too. It's
information
actually very
as well.
good. Yeah,
Yeah,
great guests. So
yeah, great guests and great hosts. So check it out. Real Estate Invest Her Show. So Matt, thank you very much for your time. Thank you so much for sharing your experiences and your knowledge, and I wish you the best.
Thank you. It's been fantastic being here, and I appreciate you taking your time out to create this voice for the real estate community as well. So thank you for doing this.
Thank you very much. Yeah. All
Thanks, Juan.
right. Thanks.